Hi, I'm Miles Sarek. Welcome back. I work with Apollo Health Insurance. I am the Medicare expert here at Apollo. And today we're going to be talking about IRMAA, Income Related Monthly Adjustment Amount. IRMAA is a penalty that you're going to pay on top of your Medicare Part B costs. So starting there, Medicare Part B for 2025 is $185 a month. And so with a Medicare Part B, $185 for someone who's going on retirement, for some, that's a good amount. For some, it's not a lot. But the one thing that you need to be focused on if you're a higher income earner, and so we're talking about as an individual, if you're approaching the $100,000 mark, or if you are a married individual filing jointly with a spouse on your AGI or your tax return for your annual gross income, you need to be focusing on your IRMAA. And when is a good time to focus on this? Well, with Medicare, they're always going to look back about 2 years on your annual gross income or your tax return. So if you are joining Medicare in 2025, they're going to actually look back at your 2023 filing. So whatever you filed last April for 2023 taxes is going to be what's applied to your IRMAA for the 2025 calendar year. And so let's get into how IRMAA is assessed. Well, it's all based on the income that you have. And so if you're an individual and you're making over $106,000 a year, you're going to be looking at a income-related monthly adjustment amount from about $50 a month, $70 a month to start, all the way upwards of close to $600, $700 a month. I recently worked with a client who was going into Medicare, and we had discussed all of their options. So we had talked about how did Medicare Parts A and B work? What does your network look like? What are the options when you're going on to Medicare Parts A and B? We decided after a needs assessment that individual would probably be best fit on a Medicare supplement plan. We went through the Medicare supplement, how that works, the cost of that. We went through their prescriptions, how much they'd pay for their prescriptions, how much they'd pay for their Part D. We went through dental, vision, some ancillary products that we also offer here at Apollo Insurance. And then we got to, well, talking about their income. I asked their income. It was well north of the top IRMAA, so income related monthly adjustment amount. And that brought their premium up about $650, $700 a month. And that wasn't just for him, but it was for him and his wife. And as you could imagine, coming from a group plan where the company that he was working with was paying a majority of that cost, and so they were only paying about $600 a month for health insurance, they then went from paying $600 a month to $1,800 a month. Now, I do understand, like I said before, that not all the time can you prepare for this income-related monthly adjustment amount penalty that you'll have to pay when going on Medicare, but there are different ways around that. You can file an appeal through Medicare to help lower that as your income drastically changes. But that's why it's important to prepare, because now individual B, who I had a conversation with, was making a lot of money 2 years prior to them going on to Medicare. And as a business owner, they started to shelter some of that income away, started paying themselves as an employee versus the actual CEO or business owner. And then they were able to shelter their income and only have a $70 penalty instead of a $600 penalty per individual. And as you can imagine, if you're going from a working full-time, getting paid the way that you're getting paid from your business or from your employer onto Medicare, and you're losing a majority of your income, and then you're going into an area where you're only maybe pulling Social Security, or maybe you're delaying Social Security till full retirement age, and then you're only going to be having your retirement as income, the last thing that you want to do is have an additional $1,000, $1,300 expense on your Medicare. And so this person had planned ahead. About 3 years prior, they had started reducing their AGI, their taxable income, and they put themselves in a spot where they only had an additional penalty, like I said, of $70. That's why it's important to prepare yourself in a way that allows you to make sure that the way that you're retiring, whether you're going on to Medicare at 65, 66, 67, 68, 69, 70, whatever that plan is for you, it's important that you're working with the right individual, something that we can do here at Apollo, or if you're working with a financial advisor, a tax professional, CPA, whoever it is, to make sure that you're talking with them years in advance, 2 to 3 years in advance, to make sure that you're preparing yourself for going on to Medicare. So that way you're not having to pay the additional cost when you're usually, most often, going into a time where you're going to be reducing your income. And so I did say that, there are multiple ways that you can do that. Obviously, if you're consulting with a financial advisor or tax professional, they're going to know many more ways than I do personally on how to reduce your AGI or taxable income to make sure that you don't pay the highest amount or even a large amount for your IRMAA. But another thing that you can do is that you can file an appeal through Medicare. And so how this works is there's multiple different things or criteria that you might have to meet. One of them is a significant change in your income. So let's say that you did retire from your job, and at your job you were making, let's just call it $350,000 a year, and now you're going on to Medicare and you're going to be taking Social Security, and you're going to go from $350,000 a year to, let's just call it, between you and your spouse, $150,000. So that's a significant drop in income, and a lot of the times you can file an appeal. Sometimes that doesn't always get approved right away. Sometimes it doesn't always get backdated. Sometimes it doesn't get approved at all. So there's no telling that with the government and filing an appeal that you're going to be able to pay less in regards to the penalty or the additional cost that you have through an IRMAA. But it is something that you can try. It is something that we here at Apollo have done and fought for our clients on their behalf to make sure that we're reducing the amount that they're paying out of pocket for their Medicare during a time, like I said, where you're going from higher income to lower income. But also, you can't always rely on just simply filing an appeal, because let's say that you do retire, and in your last year of retirement, you decide that you're retiring. Let's say you're making $300,000 at your job, and then you get a bonus, and then let's say you have stock options, and let's just say for some crazy reason that income goes from $300,000 to $900,000 for that year because you've cashed out all this and the income shows up on your statement. You get hit with a fat tax bill from Uncle Sam, and then you're also going to have to pay more for your Medicare. That is why it is important that when you're looking at Part B and Part D IRMAA, that you're not just hearing about this for the first time when you're on the phone with an agent like me. It's good to always be working with a company like us here at Apollo Health Insurance that, at the age of 62, 63, 64, 65, we're having these discussions with our clients beforehand to make sure that they're going back to their tax professionals, that they're going back to their financial advisor, to make sure that they're not putting themselves in harm's way of an IRMAA penalty, income-related monthly adjustment assessment, where they're going to be paying an additional $600, $700 a month. Or if you're a couple, like I said, upwards of $1,300, $1,400, $1,500 a month. And so hopefully this is helpful. I know that's a lot of information, but let's just go ahead and recap the main points. First and foremost, you want to prepare for an IRMAA, whether it's Part B or Part D IRMAA, way ahead of time. So we're talking 2 to 3 years in advance. Second is you want to start reducing your AGI or taxable income 2 to 3 years in advance to make sure that when Medicare looks back at your income, they're not going to see that it was this high, they're going to see that it was this high. So that way you're paying the least amount when you go on to Medicare. The third thing is that you can also file an appeal, something that a Medicare agent here at Apollo can help you with. So I hope this was helpful in regards to your Part B and Part D IRMAA, and we look forward to seeing you next time on the channel.